Hello guys, Steven Dux here. Welcome to this video. So today's video is going to be a little bit different. I want to talk about how I already made over 8 figures in 2021 and how I'm adapting to the current market conditions in 2022. So it's been about 3 to 4 years last time I released a course. So not everything is really updated, like the dollar block, minimum shorting percentages for gap up short and for other various patterns. So for this course, the purpose is to adapt to the current market conditions and all the updated informations, and also some of the new patterns that I found out in 2021. So it's going to be a really interesting course. And now I'm doing a pre-sale up into February. So it's going to take about 4 months for you guys to see the full release version. We're currently doing a discount for about 1 or 2 months. So make sure to grab the opportunities. I'm really excited to release this course. Hopefully you guys can get some of my insights about different patterns and how I really value brand new volume and also the different version of risk management. So those are the updates, and let's get into some of the method that I found out in 2021. So in terms of risk management, since the Fed is releasing massive amount of printed money, so there's tons of liquidities being floated into the market, I have found out that there's limitations of how much you can size in based on the volume and also based on the float. So there will be different version. For example, you cannot exceed over 1% of the float, and you also cannot exceed 1% of the volume. So which one comes lower, you have to follow that as a standard. So let's say ABCD that traded over 100 million shares, that you cannot exceed over 1 million shares by either shorting it or going long. But not you can really buy 1 million shares, but I'm just giving an example. So if the stock is only trading 1 million shares, then you cannot size in over 10K shares, because you also have to look at the entire day volume estimate as well. As a full version, first of all, you want to look at how much volume I traded in the pre-market. And basically you are using pre-market times 4 to 10 based on the different volume trend. Then once you have the estimated volume, then you want to go ahead and calculate how much volume is going to trade throughout the day. Then use that volume times 1%. So that's the number you do not want to exceed by either shorting or going long. Same thing with the float. Now you do not want to exceed 1% of the float. Maximum is 10%. Every time when I shorted it or going long, that is over 10%, since it's either doing weird stuff or ends up going to the opposite direction most of the time. So those are the limitations of how much volume you can size it into a ticker, for example. There's many variations of that as well. Another one is when I was finding different edges of the market, you have to wait for the uptrend to be over. And a lot of people are asking about, Steven, how do you know the uptrend is over? How can I avoid the front side before I take a huge loss? Whenever you are following the current market conditions, there is typically volume trend. So whenever you are looking at a multi-day runner or a gap up short, a multi-day runner, for example, that you will need more dollar being traded into the next day to be able to support the breakout or the first green day. That's the previous day of the current green day. It needs to trade more dollar. So you can use either pre-market prediction or consolidation price to calculate how much dollar is going to trade on the current day compared to the previous day. So you will know if the stock is likely to continue or not. And also you can value the support level. If the current day consolidation is too close to the previous support level, then it's pretty much not really tradable or shortable based on multi-day runner pattern. So once you track about enough statistics, you will find out that there is a limitation of how much dollar can be traded in certain different market caps. This is one of the data I'm going to release in the new courses. You can use that data, and also I'm going to teach the method of how you can really track based on the current market conditions. It's going to be a really useful tool. I think it's going to be in the market for many, many years to come. And I don't think it will ever change. It changes slowly based on the current market conditions, but for now, it's slowly trending down, and traders needs to be aware of that as well. So those are part of the content I want to cover for this new course. And make sure to check out the link below. There's going to be a pre-sale only for the first month. and it's going to be fully released in the next 3 months. So hopefully you guys are excited. Please leave a comment below, and thank you very much for watching. I will see you guys in the next one.